Good evening, Doc Severson here for the Theo Night Report for Tuesday, March 6th. Is the trade war still on? Who knows? It seems to go back and forth every day. So all we can do is, instead of just sitting there watching the news and trying to predict what's going to happen with the price, let's frame things in and let's understand what the trend is doing and what it's telling us, and understand the limits that which we need to trade around. So right off the bat on the S&P, let's take the big picture here. What's going on? Well, after this crazy parabolic rally in 2017, where we hit this record level of exhaustion, what it should do is go either sideways or somewhere down or somewhere in between for a few months. And the market's almost cooperating precisely with that requirement, because we're seeing volatility, we're seeing moves up, down. Nobody can figure out where this thing is going on a day-to-day basis. This is perfect for that non-linear price action that we need to be able to recharge these charts. In fact, we can start to see this coming into play. I think what we'll probably get is something akin to this, more like just an oscillation that becomes more damped with time, up and down, just forming this large symmetrical triangle. So this would be a very common reaction to something like this, where the initial energy shock that comes in on the shot across the bow eventually bounces up and down and somewhat gets damped. And then from there, one of two things is going to happen. Either we go back to quiet and trending to the upside, or we start to print lower highs and lower lows, and the volatility never goes away if we start to trend to the downside. So I'm actually very intrigued to see how this is going to break from here. One of those two things will happen, and that will probably occur by sometime this summer after this initial energy shock gets out of the way. So what do we have to deal with on the S&P 500 to begin with here? Well, I'm not a huge follower of moving averages, but when they're the 50 and the 200, I tend to pay attention because they end up being targets. Nothing more, nothing less. I don't trade against them. In fact, the old golden cross or death cross is such a overhyped and underperforming strategy. Yeah, there's a couple that have worked over the years, but most of the time they end up being false signals. So here's the initial shot across the bow that we had in early February. We bounced straight up again, way past the 61.8% retracement. We've come down to about 50% of that, and now we've come up again. So nobody can figure out what's going on here. So what we have to do at this point is, I'm thinking to myself, this is unlikely to just rip higher at this point now after such a strong move down. It certainly could. Price can do whatever it wants to do. But what I want to do at this point is to kind of frame things in. What I'm going to do is, maybe that 50-day moving average is going to be overhead resistance for now. It could happen. So what I'm going to look to do is to see whether the price exits this box to the upside, or whether we end up seeing the S&P print a lower high and then rolls over. Wouldn't that catch a lot of people up by surprise? That would also fit my call for approximately this is going to be at least a 1 month retest. So if we retest the bottom, it normally takes about at least a month for that to occur. So the reason that I'm drawing this box around in this area is because the price was printing higher highs and higher lows, then all of a sudden went from a higher high to a lower low. The pattern has been broken. So what this does is that increases the odds that this next high is going to be a lower high, and we're going to start rolling over again. So this is consistent with perhaps seeing a bottom retest or even an undercut. An undercut is actually better. I like seeing undercuts. We've seen undercuts in the past before. They do create a massive reaction, because this is where stops get cleared out. There's people that go to short on the price hitting new lows, and typically they are forced out of the market as well too. But we can go back in time and see all types of undercuts along the way here, and they're usually just fantastic signals one way or the other. Now, could the price actually break higher from here? Well, it certainly could. It certainly could. So that would change the polarity just a little bit. This may be a smaller time frame, higher low. I don't know yet. Remember, we have Fed meetings coming up in a couple of weeks. We've got this whole trade war issue that's on the table right now. Anything can goose this market in any direction, one way or the other. So this is why I'm thinking the best way to do is to keep your head out of the news. Just watch this box from about 26.50 up to about approximately 27.25. So it's about a 75-point box that the price is in. See if it breaks above the 50-day moving average. If it breaks above there, see how it handles this trend line. This trend line may come into play sooner rather than later. Okay, so that's the S&P 500. So this is obviously one of the indices that's affected by this whole idea of a trade war. The other one that's definitely affected by the trade war is the Dow Jones. So the industrials right now, a little bit weak today, barely closed up, just about unchanged for the day, but definitely with the members that are in part of the Dow Industrials, these are very, very much open to a trade war. So both Boeing and Caterpillar the other day got just trounced because of this issue. So we can do the same thing here with the Dow as well too. This one is a much more significant higher high to a lower low. So that improves the odds that the next high is going to be a lower high and roll over. We could be just weeks away from a bottom retest if that does occur. Now, the beneficiary of all this trade war talk has been the small caps, because the small caps are more unlikely to get involved. They're more domestic companies. They're less likely to get involved in a trade war. So far what we've seen is the price coming up, printing a higher low, and this is a closing higher high so far. Notice also that the Russell is also in very, very good position. There's no lack of energy across the board. All three time frames are actually doing well. So we could see more of a risk on type. I mean, usually when you say Russell, you think risk on, and this is perhaps where fund managers are going to be forced to go in the near term, is into the Russell. So watch for this one. This one actually could start to see a lot of activity and a lot of accumulation into the Russell 2000. Nasdaq Composite has also been very strong. So far, this is a pretty significant higher low and seems to be just about to print a higher high. But so far, it is a lower high right now. Let's watch out for this one. So right now, we can kind of put this box up in this area between the recent highs and the recent lows. Let's see which way it wants to break from here. Again, this would be a huge fall if this drops out of here, prints a lower high and a lower low. That's a long way down there for the Nasdaq Composite. So this to me is kind of the key towards getting through this next couple of months, because we're going to see these very strong rallies and extremely strong sell-offs, and they're going to go back and forth. And the one comment that I've heard from more people is that they're getting dizzy because they don't know which way the market is going. And this is precisely what the market has to do in this condition when it's coming out of this massive exhaustion level. Down here on the monthly and the weekly, you're going to see tape that makes no sense whatsoever. It's not going to be linear at all. In fact, it needs to be as non-linear as possible for this to charge up as quickly as it can. So I still believe that we do have a couple of months of this up and down, back and forth, non-linear natured price action to come in the next couple of months, and that should probably just about do it. The market will then be ready for the next phase, whether or not it's to break out of the consolidation to the upside or start to print lower highs and lower lows and break outside of this to the downside. That would be the precursor to a bear market. So what happens after this major consolidation is very, very important, because from quiet and trending, this is the way it always goes, right? From quiet and trending, it goes into sideways and volatile. This is what we're in right now. And then one of two things happens. It either breaks into quiet and trending again, or it breaks into trending and volatile. And that is a bear market. We haven't truly seen one of these in a long time. That's it for today's report, folks. Thanks for listening. We'll see you tomorrow.